Friday, May 5th, 2023, Monaco 64, home of alternative economics and contrarian views. Today, with all that's going on, all the noise, all the bank failures that are going on, all the speculation of whether the Fed's going to cut or not, and whether we're going to see a total implosion of the system, I thought it would be good to look at the Dow-Gold ratio, and we're going to look at the real reset. It's not just me who's been speaking about the financial reset for years, way before Klaus Schwab stole that term reset and turned it into his great reset, which, by the way, I think is going to fail miserably. So I'm going to create actually a playlist. I don't think I have one about the Dow-Gold ratio and the financial reset. I've been talking about this since March 2016, so over 7 years. So today, this is going to be like a part 2 of one of the videos I did in September of 2021. It was entitled, The Dow-Gold Ratio Will Tell Us When the 21st Century Reset Will Be Complete. And we're going to look at a few charts and why the Dow-Gold ratio is so important in terms of the resets. Before I start, just an update on Rudy. He's doing really well. I try to get him to stay on the sofa, but he's been out in the garden already. He's like gotten all dirty because of the dew out on the grass. Yesterday he had his what's called the puppy introduction grooming, because you're not supposed to really trim his coat before he's 6 months. So he looks quite good. And we also went to the park. So just wanted to show you a little clip of Rudy in the park. He's doing really well. He's off the lead. He's following us. So here you go. All right, let's get back to serious things. And why, first of all, some of you might be asking, it might be the first time you're watching me, why is the Dow-Gold ratio so important? Well, first of all, gold and commodities in general, like silver and even copper, have been money for thousands of years. And they've been very good stores of value, commodity money as well. Paper money, fiat currency, always goes to zero, their value. They always become worthless because politicians and bankers abuse the power of fiat currencies. And they have done so, especially in the last 50 plus years. So I want to quote someone I respect, who was a central banker, who helped found the Central Bank of Sri Lanka, as it was called at the time, Ceylon, after World War II. He helped also organize the Central Bank of the Philippines. He worked for the New York Fed. He worked for big Wall Street banks. And his name is John Exter. Many of you have heard of Exter's Pyramid. And I'm going to put this article here, Currencies Today Are Owe You Nothings, by John Exter from June 1972. You can read the whole thing, but this is what he says here, and this is why I think gold is so important in terms of resetting the system. And is it any wonder that a lot of the major central banks and the very wealthy are buying a lot of gold? He says, thus, the world we have so long known, in which most currencies were redeemable at a fixed price in a store of value money like gold, is in disarray. People are confused and wondering what money they can trust. Sensing the stability of the system as a whole, they turn day by day from one means of payment to another in the foreign exchange markets, and much more gradually to store a value money like gold in the London and Zurich gold markets. So this was in 72. Yes, the world was in disarray, much like it is today. Why was it in disarray in 72? Well, because Nixon had taken the dollar off the gold anchor. So this is why gold is important. The other reason it's so important and why it's important for the reset, financial reset, is, as Jim Sinclair and Peter Carlin said in their pocketbooks of gold, that gold is a revealer of falsely stated wealth. Basically, that's saying when you have a financial bubble where you have everything bubble like we've had central banks print trillions and trillions upon trillions of dollars of fake out of nothing money to create, well, falsely stated wealth. Gold will come back to reveal that falsely stated wealth, and it could come back basically on staying pretty much at the same level in terms of value versus the currency, but then having all other assets collapse, or it could do it another way by rising and basically providing some support for that falsely stated wealth. And I think that's the purpose of the Dow Gold ratio. So let's go to the charts, because the charts don't lie. I've got a chart here from TradingView going back to the late 1890s, because that's when the Dow Industrial Index was created, compiled. That was in May of 1896. So we can go as far back as that. So here we have how many ounces of gold you need to buy one Dow. So there you go. Every time this ratio spikes, it means that there's falsely stated wealth, and then we get a reset where that ratio goes down towards 2 or 1, and you can see in the 30s it went from almost 20. You needed 20 ounces of gold to buy one Dow, and it went down to around 2. I think that was around 1932, 1933. And after that, we saw another cycle of credit creation, unfortunately, of falsely revealed or falsely created wealth. And why do we keep making these same mistakes? Well, because as you can see, the cycles are long. They take a couple of generations and people forget. And we keep repeating the same mistakes. Will we make the same mistakes again in the future? Probably. But we can always learn from that, of course. So the next credit boom, of course, was, bottomed around World War II. And then post-World War II boom, we saw that ratio go up to around 28. That was, I think, around 1966. So you needed like 28 ounces of gold to buy one Dow. And then everything corrected. All that falsely stated wealth was basically put under the microscope by sound money. And we went all the way back to almost 1-to-1. I think it was 1-to-1 in January of 1980, but it took 14 years. Notice how these credit booms are getting bigger and bigger. And why do I think that's happened? Well, you have to go back to December 23rd, 1913. Yes, when the Federal Reserve Act was passed and the central bank was created. The road to fiat currency was just beginning. I think that's why we've seen huge credit bubbles. That's why the next one we're going to look here from 1980 to Actually, 1999, summer of 1999, that was another huge credit bubble created by the Federal Reserve. So we went from around 1 in 1980 all the way up to around 45, and that was in 1999. So that was 45 ounces of gold you needed to buy one Dow Jones Industrial Average. And as it was screaming there, this is totally overvalued. And then we corrected, and it took until 2011, and it went down to just under 6. But as we've seen in the past, we usually get nearer to 1, 2, or 1. And as you can see, over the decades, back in the early 30s and the 1980, the ratios went to 2 and 1 respectively. We could see this time around, we could see the ratio go negative. Let's say you would need less than 1 ounce of gold to buy 1 Dow. And yes, we have had a rebound in the Dow relative to gold since 2011, as you can see here. But we had that as well in the previous resets, as you can see. Back in the 30s, we had a little bit of rebound, and then it went back down, and then it really took off just prior to, I think it was 1942. The same thing happened in the 70s. There's a false rebound there, and then it failed, and it went back down in 1980. And I think we're seeing the same thing now. So let's go to another chart here. And this chart here is more of a short-term chart of the Dow gold ratio. And I've got a couple of charts here, as you can see. We'll come to that in a minute. But this tells you why I think we are on our way down in terms of this ratio, and why I think gold is going to outperform the stock market. Does this mean we're going to have a crash? Not necessarily in the stock market, no. But as you can clearly see, this line here, this trend line, top trend line, has been breached. It looks like a very important line. The stock market versus the Dow has tried to rebound from below that line, and it looks like it's failed now. And this is a monthly chart, of course. So now I'm sure you're going to ask, how long is this going to take for the reset? Well, from looking at the past corrections, they seem to don't take that long once they start. And the thing about this latest rebound in the Dow versus gold from 2011 to, actually it was around 2018, was that it was a huge period for injection of funny money, zero rates, even negative rates in some countries, massive QE. And despite that, financial assets, as per the Dow and others, were unable to really make much gain versus real money. So I think it could be a very quick, relatively quick move lower here towards the 1 level. It could take a year, it could take 2 or 3 years, but I think the path forward is for the reset here. So the smaller charts here, I just wanted to show you that this dropped from around 45 to around 6 in the Dow gold ratio from around the middle of summer of 99 to September 2011. Yeah, it was a big drop of the ratio. But if you look at the stock market, it actually went sideways. It was gold that did all the work, because we went from around 250 to 1900, as you can see. So this is what I'm trying to say. We could see the stock market continue to go sideways for a few years, just like it did there from 2002 to 2011-12. Or we could see some corrections but I think it could be sideways, and what will reset the system will be the move higher in gold to reliquify the system. So just wanted to show another couple of charts. One about silver, of course. Many of you might be asking about silver. Well, that's what silver did in the last really big move lower from 45 to 5 to 6 in the Dow Gold ratio. We went from less than, well, around $4.50 all the way to $50. So it was like a 10 bagger silver. So some of the people who are talking about $100 silver, they might not be too far off. And as you can see as well, silver seems to be breaking out here. And now the CRB, which is all the other, well, the commodities basket, that did well as well from 02 to 08. Yes, there's a sharp correction lower there when we had the crisis of 08, just like we had in silver. But then it rebounded. And I think the fact that the CRB didn't make a new high like silver and gold did was an indicator that all was not well with the whole system, that we would have more crises coming in the future. And I think that's where we're now. So that's why I think we're pretty close here to really accelerating in this reset. And as I said, I don't know how long it's going to take, but you will know when it's complete, when the Dow Gold ratio is around 1, or it could be even less than 1. And I'm not going to try to give you numbers here. It could be anything. But one thing it says, it's in relative terms, gold and silver and commodities are going to continue to outperform. And what's the objective here of knowing these things? Well, you will know when it's time to divest from hard assets. Some of your hard assets, it depends on the individual. They might want to divest everything into other sectors. Or you might want to keep your hard assets, because hard assets are always worth something. So there you go. That's the way I see things. So with that, let's quickly look at where the markets are this morning. It's almost 9 a.m. London time. We've got spot gold at 2,040. It's down about $10, right near the lows. The high's been 53. Silver is down 11 cents, trading at 25.91, right on the lows. The high's been 26.15. We've got non-farm payroll numbers today. That's the big news that's coming out, the jobs data for the US. It will create a lot of short-term noise in the markets, of course. So we've got the Dow futures up 80 points, NASDAQ up 50, and the S&P up about 14 points. To the currencies, sterling is up 0.25%, 126.08. The euro is up 1/8 at 110.26. And the dollar is down slightly versus the yen at 134. Dollar is unchanged versus the yuan at 691.71. The dollar is down 2.5% versus the ruble at 76.60. So we've seen quite a big drop in the last week or so. We were around 82, I think the dollar was, versus the ruble. And now it's at 76. To the other currencies, Aussie dollar is up 0.2% at 67.30. The dollar is down 0.25% versus the Canadian dollar, 135.00 actually. And the Kiwi dollar is up 0.25 at 62.95. To the general commodities, WTI crude is up almost 2% actually, is trading just below 70. Brent is up 1 2/3% at 73.58. Platinum is down $6, trading at 1,042. High grade copper is down 0.1% at 385.85. And we'll just quickly look at the bond market. The 10-year yield is up 3.5 basis points at 386, and the 2-year is up 7 at 380. So with that, I'm going to wish you all a very good day and a very good weekend. Take care. Bye.